Welcome to our deep dive into the Indus Valley, the vibrant Indian startup ecosystem. We're using the 2025 report from Bloom Ventures, a leading seed fund, as our roadmap today. This report, it isn't just about the numbers. It's a fascinating narrative about India's economic journey over the last 5 years.
It offers a unique perspective on India's transformation, told through the lens of venture capital, which
Okay.
makes it all the more compelling.
Absolutely. And it's packed with surprising insights. I was amazed to learn that India's IPO market is booming. It even surpassed the U.S. in capital raise last year. And, get this, India is leapfrogging modern retail and diving headfirst into quick commerce. Let's go on there.
Yeah, that's one of the trends we'll definitely unpack. But first, to understand where India is today, we need to look back at the economic roller coaster it's been on over the past 5 years. Remember the COVID-induced shock of 2023?
Oh, how could we forget? It was the worst contraction in India's post-independence history.
Yeah.
It really felt like the economy had hit a brick wall.
Exactly. But then came this remarkable V-shaped recovery. The government pushed for growth through spending initiatives, while the RBI, the Reserve Bank of India, kept interest rates incredibly low, trying to maintain stability.
It was a delicate balancing act, for sure. So this dual approach, it led to a surge in consumer spending, right? People were eager to get back out there and spend after being locked down for so long.
Precisely. But this consumption boom, well, it came at a cost, a soaring fiscal deficit and the inevitable rise of inflation.
The classic economic dilemma. So how did the RBI try to get things back under control?
Well, they had to apply the brakes, gradually raising interest rates and reining in those easy money policies.
Okay, makes sense.
Yeah.
Didn't the report also mention a difference in how urban and rural consumers were affected by all this?
Absolutely. While urban consumers were feeling the pinch of inflation more acutely, rural areas were actually benefiting from various government support programs.
So two different realities playing out in India. But let's zoom out a bit and look beyond these recent fluctuations. What are the long-term structural forces shaping India's economy?
This is where it gets really interesting. Unlike China, where investment and manufacturing dominate, India's GDP is heavily reliant on consumption and services. This means that consumer sentiment has an enormous impact on the overall health of the Indian economy.
So keeping the Indian consumer happy is key. But wasn't there also a point about how this reliance on consumption impacts savings?
That's right. India has a relatively low savings rate, which can impact its ability to invest in long-term growth. And the report highlights a surprising factor contributing to this: India's love for gold.
Wait, really? Gold? How does that play into the savings problem?
It's tied to land ownership issues. Because of a complex legal system and unclear land records, it's difficult to use land as collateral for loans in India. This makes gold, which is seen as a more stable and easily tradable asset, the preferred choice for many Indians, even over financial savings.
Wow. So land issues lead to gold hoarding, which then impacts overall savings and investment. That's a fascinating connection. But what about all the progress we've seen in digitization? Isn't that helping to formalize the economy and boost savings?
It is, but there are still challenges. While the rise of digital lending platforms has increased access to credit, it's also contributing to the problem of low savings, especially with the easy availability of small-ticket personal loans.
So it's a double-edged sword, increased access to credit, but potentially at the expense of long-term financial security. The report also dives into India's human capital, right? Specifically, the challenges around education and employment.
Yes, India has a demographic dividend with a young and growing population, but it's not translating into the expected economic benefits. There's a high youth unemployment rate, even amongst the educated, and a mismatch between the skills being taught and the jobs available.
That's a major concern. So what are the long-term implications of this?
It's a problem that needs urgent attention. If India can't effectively utilize its young workforce, it risks missing out on a major opportunity for economic growth. The report also highlights the persistent challenges in manufacturing, another sector crucial for job creation and overall economic development.
Right. We know manufacturing hasn't reached its full potential in India. But didn't the government announce some initiatives to boost the sector?
They did, and we're seeing some positive results. Initiatives like production-linked incentives, PLIs, along with import bans and tariffs, are encouraging domestic production. However, there are still hurdles to overcome, particularly in land acquisition, labor regulations, and access to capital.
It sounds like a complex equation with a lot of moving parts. But there's one area where India seems to be a global leader, this whole concept of a digital welfare state. What's that all about?
It's about leveraging technology to deliver government benefits directly to citizens, reducing leakages and promoting financial inclusion. India's digital public infrastructure, DPI, including Aadhaar, the unique ID system, and UPI, the mobile payments platform, is playing a crucial role in this transformation.
So India is using its tech prowess for social good.
Mhm.
Wasn't there also a point about how India's wealthiest segment, what the report calls India One, is driving a lot of economic activity?
Yes, India won, the top 10%, maybe a small segment. But they account for a significant portion of discretionary spending. They're the ones fueling the boom in the equity and F&O. Futures and options, markets.
So a small but mighty group, but is their wealth trickling down to the rest of the population?
That's the big question. The report suggests that while India One is getting wealthier, the overall size of this affluent class isn't growing as fast as some might expect. This raises concerns about social mobility and the potential for a widening gap between the rich and the rest of the population.
Okay, so this divergence between India One and the rest of the country is something to watch closely. But let's shift gears now and dive into the heart of Indus Valley, the startup ecosystem. What's the state of venture capital funding in India?
Well, globally, the U.S. venture market bounced back strongly, largely fueled by the AI boom. Meanwhile, China's funding has been on a downward trend. In India, we saw a slight uptick in funding, but it's nowhere near the peak levels of 2021 and 2022.
So the funding landscape is quite dynamic. But what does this mean for Indian startups? Are they struggling to secure the capital they need to grow?
It depends on the stage of the company. Seed funding remained relatively stable, but there's a new trend of larger seed checks, what the report calls mango seeds.
Mango seeds, what are those?
These larger seed rounds allow startups to scale faster and attract top talent, but they also come with higher expectations from investors for rapid growth and returns.
Interesting. So higher stakes right from the start. What about early stage and late stage funding? How are those trends looking?
Early stage funding has actually seen a bit of a dip, with fewer deals happening in that space. This funding gap in the early stages is leading to the emergence of a new breed of investors called micro VCs.
Micro VCs. What sets them apart from traditional VCs?
Micro VCs typically manage smaller funds and focus on writing smaller checks at the early stage, filling the gap left by traditional VCs who are moving towards larger deals.
That's a good sign, right? It means there's still support available for startups in those crucial early stages. But what about late stage funding?
Late-stage funding in India remains subdued, which is making it tougher for startups to raise larger rounds for expansion. This funding crunch, coupled with tighter equity markets and longer fundraising cycles, is pushing many startups towards venture debt as an alternative.
Venture debt. It provides much-needed capital.
Yeah.
But doesn't it also come with its own set of challenges?
Exactly. Venture debt can be a useful tool, but it's not without risks. Startups often face higher liquidation preferences, equity-dependent credit lines, and the potential for a negative cycle if they're unable to meet their debt obligations.
So, a risky proposition, if not managed carefully. But amidst all this talk about funding and valuations, the report also highlights a heartwarming story about an investment that's not your typical venture capital play.
Yes, the story of Westbridge's investment in the Westbridge Anand Chess Academy, or YHA, is a wonderful example of how venture capital can support talent development in unexpected ways.
I love this story, so tell me, what's so special about WSAA?
WACA is nurturing the next generation of Indian chess grandmasters, partnering with none other than Viswanathan Anand, a 5-time world chess champion. It's a testament to how venture capital can go beyond just financial returns and create a positive social impact.
Now, that's what I call investing in the future. But let's talk about the elephant in the room, the phenomenal performance of the Indian IPO market. Didn't it break some records last year?
It did. India saw the highest capital raised via IPOs globally. It wasn't just the number of IPOs that was impressive. The issue sizes were also at record levels. And what's really interesting is that public markets are becoming more accessible to a wider range of companies.
So it's not just the big established players anymore. Smaller companies are also getting a shot at going public.
Exactly. Companies are going public earlier in their life cycle, even with lower revenue and market caps. This is particularly exciting for companies that might not attract large late-stage venture capital investments.
So a more inclusive IPO landscape.
Yeah.
But is there a specific segment of the market that's particularly active right now?
Yes, the SME IPO market, which is the small and medium enterprise segment, is actually outperforming the main index. The report highlights the success of companies like E2E Networks, a cloud provider that started on the SME board and has achieved incredible growth.
That's inspiring. But what does it take for a company to successfully navigate an SME IPO?
The report provides some practical guidance for founders considering this path. It emphasizes the importance of having a long-term vision, demonstrating business predictability, and being crystal clear about how the funds raised will be utilized.
Sound advice. But now, let's dive into the sector deep dives. The report focuses on two areas that are really reshaping the Indian startup ecosystem: quick commerce and AI. First up, quick commerce. What exactly is it, and why is it experiencing such explosive growth in India?
Quick commerce, or Q-commerce, is all about delivering groceries and essentials to your doorstep in minutes, not hours. Think 10 to 15 minutes max. It's like having a mini supermarket at your beck and call.
Sounds incredibly convenient. But what's driving this rapid adoption in India? Is it just about impatient consumers?
It's a confluence of factors. India has a relatively low cost of labor, which makes those super fast deliveries economically viable. Cities are densely populated, so those dark stores, the mini warehouses that quick commerce companies use, can be located closer to customers. And there's a cultural element, too. Indians are used to small, frequent purchases from local kirana stores, so quick commerce fits nicely into that pattern.
So it's not just about speed, it's about tapping into existing consumer behaviors. Now, who are the major players in this space? Is it a crowded market?
The report highlights Blinkit, Zepto, and Instamart as the dominant players. They're all aggressively expanding, setting up networks of dark stores and pushing into new territories beyond the major cities. It's a fierce battle for market share.
So a land grab is underway, but the report also injects a note of caution, asking if there's irrational exuberance around quick commerce. What are the concerns?
While the growth has been phenomenal, some of the ambitious projections might be overly optimistic. The question is whether the growth in monthly active users, those actually placing orders, will continue at this pace as the market matures. And the cost of setting up and operating all those dark stores across a vast country like India is immense.
So a reality check amidst the hype. But what about the broader impact of quick commerce? How is it affecting the retail landscape in India?
It's shaking things up. India's modern retail sector, with supermarkets and big box stores, is relatively underdeveloped compared to the US or China. Quick commerce seems to be leapfrogging over that stage, going straight to the consumer's doorstep.
So bypassing the traditional retail model altogether? That's a bold move. But what about the impact on those neighborhood kirana stores? Are they feeling the heat?
There's definitely concern. Quick commerce is competing directly with them, offering convenience and competitive pricing. Some kirana store owners are reporting a drop in sales, and they're having to adapt to survive.
It's a classic case of disruption. But how are quick commerce companies themselves making money? Those razor-thin margins have to be a challenge.
They're trying various strategies. There are delivery fees, commissions from brands, and increasingly advertising revenue from those targeted ads you see in the app. They're also introducing their own private label products to boost margins.
So a constant juggling act to balance affordability for consumers with profitability for the business. The report also mentions that quick commerce is expanding beyond just groceries. What else are they delivering these days?
They're becoming the new everything store, adding categories like electronics, apparel, and even medicine. It's blurring the lines between quick commerce and traditional e-commerce. Where this convergence will lead is anyone's guess.
Intriguing times for Indian retail. But let's shift our focus now to the world of artificial intelligence, or AI, which is transforming industries globally. The report asks a very specific question. Is India on the verge of getting its own foundational AI model?
That's the million-dollar question, isn't it? China had its DeepSeek moment with massive investments in creating its own foundational AI model, but India hasn't had that breakthrough yet. Why is that?
That's what I'm wondering. What were the factors that led to DeepSeek in China, and why hasn't India followed a similar path?
Well, China has been strategically investing in AI research and development for years, building a strong talent pool of AI experts. They also had a more permissive data environment, which is crucial for training those large language models. And then there was a bit of serendipity involved, with a hedge fund deciding to divert resources towards AI development.
So a combination of government support, talent, data, and a bit of luck. But is India trying to catch up?
There's definitely a growing sense of urgency, and the government is taking action. The recent budget allocated significant funding for AI research and is making those specialized GPUs, the chips vital for AI development, available at subsidized rates. The goal is to encourage the creation of homegrown AI models.
So a push for AI sovereignty in a sense. But can India pull it off? Does it have the resources and expertise to compete on a global scale?
India has a history of frugal innovation, finding ways to do more with less. Think of the success of UPI, which revolutionized digital transactions in India, or ISRO, the Indian Space Research Organization, which has achieved incredible feats in space exploration on a relatively tight budget. There's a belief that this same ingenuity can be applied to AI.
So there's hope for an Indus Valley AI moment down the road.
Yeah.
But what about the current AI landscape? Are there any Indian companies making waves in this space?
Absolutely. The report highlights several impressive consumer AI startups emerging from India. There's Repurpose.ai, which helps users repurpose video content for different platforms, and Gamma.app, which uses AI to help you create stunning presentations. They're both seeing impressive growth, showcasing Indian innovation in the AI arena.
That's fantastic. So while India may not have its own foundational model yet, the seeds are being sown, and the talent is clearly there. Now, let's dive back into the Indus Valley playbooks, those strategies that startups are employing to succeed in this unique market. The report focuses specifically on how companies are tailoring their products and services for India too, that massive and aspirational emerging middle class.
That's a key theme in the report. India, too, represents a huge opportunity, with hundreds of millions of consumers eager for products and services that meet their specific needs and aspirations. But cracking this market requires a deep understanding of the Indian consumer.
Right. And the report talks about how those strategies have evolved over time, contrasting the historical playbook with the evolved and emerging playbooks. So let's start with the historical approach. What did that look like?
In the early days of the Indian startup ecosystem, many companies simply tried to adapt existing Western products for the Indian market. It was a copy-paste approach, with some tweaks here and there, but not always a perfect fit.
Makes sense. So how did the playbook evolve from there?
The arrival of Jio,
Woo.
which brought affordable internet access to millions, and the rise of UPI, the mobile payments platform, were game changers. Companies realized they needed to go beyond just localization. They had to re-engineer their products from the ground up to leverage these new technologies and cater to the unique preferences of the Indian consumer.
So moving beyond just tweaking existing models to create something truly tailored for the Indian market, what's a good example of this evolved approach?
A great example is Stage, the streaming platform that offers high-quality entertainment in regional languages at incredibly affordable prices. They've cracked the code on efficient content production and seamless delivery to a vast audience.
So understanding the local nuances and leveraging technology to deliver value. But what about this emerging playbook? What makes it different?
The emerging playbook is about rethinking the product from the ground up, focusing on the fundamental needs of the India 2 user. It's not about adaptation or re-engineering. It's about building something entirely new.
Okay. I'm intrigued. Can you give me an example of a company that's using this emerging playbook?
Take Kaleidofin, a fintech company that's revolutionizing credit scoring. They've developed an AI-powered system that uses alternative data points like mobile phone usage and social media activity to assess creditworthiness for those who lack a traditional credit history.
Wow. That's incredibly innovative. They're breaking down barriers to financial inclusion, but the report also mentioned two specific features of this emerging playbook, voice and microtransactions. What's the significance of those?
Voice is becoming a powerful way to engage with consumers who might not be comfortable with text-based interfaces.
Yeah.
Apps like FRND, AstroTalk, and even Local, which delivers local news and discussions, are all leveraging the power of voice. And microtransactions, those small, bite-sized payments, are opening up a world of possibilities, allowing consumers to pay for content and services in a way that aligns with their budget.
So making technology more accessible and affordable. And the report highlights a really interesting case study. Voice Club, an audio-only dating app. Tell me more about that.
Voice Club is a unique approach to online dating, shifting the focus away from swiping through profiles to actually having conversations and connecting based on shared interests. It's a prime example of how innovation in India, too, can lead to entirely new business models.
Amazing. We're seeing real ingenuity in how startups are approaching the Indian market, going beyond just adapting existing models to creating something truly unique and impactful. But there's another fascinating aspect of the Indus Valley that I'm keen to explore, how the startup ecosystem has influenced Indian advertising.
It's a topic I'm eager to discuss. Indian startups have brought a fresh and often irreverent perspective to advertising, challenging the norms and creating campaigns that resonate with a younger, more digitally savvy audience.
Okay. I'm all ears. Tell me more about this advertising revolution.
Well, for starters, Indian startups have embraced humor and relatability. They're not afraid to poke fun at themselves, to show their human side. They've also been incredibly creative in their use of social media, crafting viral campaigns that spread like wildfire.
So a more authentic and engaging style of advertising.
Exactly. And they've been incredibly effective in using influencers, partnering with popular YouTubers, Instagram stars, and even TikTok creators to reach their target audience.
It's a smart strategy, tapping into the trust and credibility those influencers have built with their followers. But the report also talks about a specific advertising trope that Indus Valley startups have pioneered. Can you tell me more about that?
It's the art of humanizing celebrities, making them seem more relatable and down to earth. Instead of portraying celebrities as unattainable icons, these startups cast them in everyday situations, often with a humorous twist.
So bringing celebrities down from their pedestals and making them seem more like, well, regular people.
Yeah.
But could this approach backfire? What if people start to see through it and find it inauthentic?
That's a valid concern. There's definitely a risk of overdoing it. The key is to strike a balance between humor, relatability, and authenticity. If it feels forced or manipulative, it could turn consumers off.
Okay, so walking that fine line. But how have established brands responded to this shift in advertising? Are they feeling the pressure to adapt?
Some are slower than others, but many are recognizing the need to evolve. We're seeing more and more traditional brands partnering with startups and those quirky creative agencies that emerged from the Indus Valley scene. They're realizing that to connect with younger consumers, they need to embrace humor, relatability, and a more authentic communication style.
So a cross-pollination of ideas and approaches, which is good for everyone. But let's shift gears now and address the elephant in the room for many e-commerce companies: returns. India has a notoriously high return rate, especially in categories like apparel and footwear. Why is that?
There are a few factors at play. One is the prevalence of cash-on delivery, which allows customers to pay for their orders upon delivery. This can lead to more impulsive purchases and a higher likelihood of returns because they haven't committed financially up front.
That makes sense. If you haven't paid yet, it's easy to change your mind.
Yeah.
What are some of the other factors contributing to this high return rate?
Another issue is the lack of standardized sizing in the Indian apparel market. Different brands use different sizing charts, making it difficult for customers to be sure about the fit without trying it on first. There's also a cultural aspect. Indian consumers are used to physically examining products before buying them, especially for things like clothes and shoes. So, online shopping, with its inherent uncertainty about fit and feel, naturally leads to more returns.
So a combination of payment methods, sizing inconsistencies, and consumer behavior. But the report highlights how Indus Valley startups are tackling this challenge with innovative solutions. What are some of the playbooks they're using?
One approach is to encourage prepaid orders by offering discounts or slightly increasing the cost for cash-on delivery. This makes customers think twice about impulsive purchases as they're committing financially upfront.
Smart. It makes the purchasing decision a bit more deliberate. What about the sizing issue? How are they addressing that?
Some companies are getting very detailed with their sizing charts and providing more information about the fit and feel of their products. Others are partnering with technology providers that offer virtual try-on solutions, allowing customers to see how a garment might look on them using their phone's camera.
Okay, so using technology to minimize uncertainty. But what about those customers who still want to physically examine a product before making a decision?
That's where try-and-buy options come in. Some companies let customers order multiple sizes or variations of a product, try them on at home, and then return what they don't want. It replicates the offline shopping experience and reduces the risk of returns.
It's all about giving the customer more control and flexibility. Now, the report also mentions a company called Delivery, a logistics provider that's playing a crucial role in tackling the returns problem. How are they involved?
Delivery has developed an AI-powered RTO predictor, which stands for Return to Origin. This tool analyzes various data points, like customer purchase history and delivery location, to predict the likelihood of a return.
So they're using data to get ahead of the problem. What do companies do with this information?
This allows companies to take proactive steps to reduce returns. They might contact the customer to confirm the order or offer alternative delivery options.
So it's all about using data and AI to make the process smoother. But beyond returns, there's another logistical challenge that's specific to India: the complexity of addresses. I hear it can be a nightmare for e-commerce companies.
You're absolutely right. Unlike the structured addresses we see in countries like the US, Indian addresses can be long, winding narratives, often lacking specific landmarks or postal codes. This makes it incredibly difficult for delivery personnel to find the right location.
That's fascinating. I never realized addresses could be such a significant hurdle. What kind of impact is this having on e-commerce operations?
It's leading to delays, frustrated customers, and increased costs for companies. It's a problem that needs a creative solution.
So how are startups addressing this address problem?
They're coming up with ingenious solutions. Some companies are using GPS technology for more accurate location pinpointing. Others are asking customers to upload photos of their homes or nearby landmarks to help delivery personnel. There are even companies developing AI-powered address verification systems that decipher those complex Indian addresses and standardize them for easier delivery.
It sounds like they're bringing order to chaos, using technology to overcome this unique challenge. Now, let's move on to a segment that's often overlooked but holds enormous potential: the Indian diaspora, or what Bloom Ventures calls India.
The Indian diaspora is one of the largest and most affluent in the world. With significant purchasing power and a strong connection to their homeland, they represent a massive, untapped market for Indian startups.
So how are companies tapping into this global audience? What are the strategies for reaching India?
The report presents a framework called the Diaspora Marketing Framework, which categorizes diaspora personas based on income and affiliation to India. This helps companies target specific segments within the diaspora with messages and offers that resonate with their unique characteristics.
So understanding the nuances of the diaspora is key. The report also mentions specific marketing channels that are particularly effective for reaching this audience, right?
Yes. Influencer marketing is a powerful tool for connecting with the diaspora. Indian influencers, particularly those based in key diaspora hubs like the US and the UK, have built large and engaged followings. They can be incredibly effective in promoting products and services to this audience.
So leveraging the trust and credibility of those influencers. But what are some of the other channels companies are using to reach this global audience?
Social media advertising is another essential channel. Platforms like Facebook and Instagram allow companies to target very specific demographics within the diaspora based on their location, interests, and even language preferences. And then there are diaspora-focused media outlets, both online and offline, that can be highly effective for reaching this audience.
It sounds like a mix of traditional and digital strategies, all carefully tailored to resonate with different segments within the diaspora. The report highlighted a company that successfully cracked the diaspora market, right?
They did. They showcased Inde Wild, a beauty brand that initially leveraged its founder's massive online following to build a loyal customer base within the diaspora. Then they expanded their reach by using a combination of influencer marketing, targeted social media ads, and strategic partnerships with other brands that also cater to this market.
So a multi-pronged approach that's clearly paying off. But let's circle back to those Indus Valley playbooks, the clever tactics startups are employing to win in the Indian market. You're about to explain how some companies are navigating the tricky world of returns.
You're right, returns are a major pain point, especially for categories like apparel and footwear. One interesting strategy is to encourage exchanges instead of outright refunds.
I can see how that would be beneficial.
Yeah.
The company retains at least some revenue, and the customer still gets something they hopefully like.
Exactly. And to sweeten the deal, some companies are even offering store credit or gift cards as an incentive for exchanges, making it a more appealing option than just getting your money back.
So it keeps the customer engaged with the brand and softens the financial blow of returns. Are there any other tactics they're using to tackle this issue?
Another clever playbook is the try and buy option, which is particularly effective for apparel where fit is a major concern. The company allows customers to order multiple sizes or variations of a product, try them on at home, and then return what they don't want. It essentially brings the fitting room experience online.
That's brilliant. It takes away a lot of the uncertainty of online apparel shopping. Does the report provide any specific examples of companies successfully using this try-and-buy model?
They highlighted Slick, a quick commerce apparel player, as a prime example. They're seeing a significant chunk of their orders coming through this option, which tells you that customers are finding it valuable.
Makes sense. It takes away a lot of the guesswork. But now let's zoom out and look at the bigger picture of Indus Valley. We've talked about the economic landscape, the funding trends, and some sector-specific challenges. What are some of the broader hurdles that startups are grappling with in this environment?
One challenge that often gets overlooked is the fierce competition for talent. India has a vast pool of skilled workers, but finding and retaining the best and brightest is a constant battle, especially in the tech sector.
So it's a talent war in Indus Valley. What are companies doing to win this war?
They're getting creative. It's not just about offering competitive salaries anymore. Companies are realizing they need to create a culture that attracts and motivates top performers.
So what does that look like in practice?
They're offering generous benefits packages, flexible work arrangements, opportunities for professional development, and even equity in the company. They're going the extra mile to make their workplace a place where people actually want to be.
It's about creating a sense of ownership and purpose. But beyond attracting talent, what about the challenge of navigating India's regulatory landscape? Isn't that a bit of a minefield for startups? Especially in heavily regulated sectors like fintech and healthcare?
It absolutely can be. Startups need to be nimble and adaptable. Staying on top of the ever-evolving rules and regulations, hiring experienced legal experts is crucial to help them navigate this complex web of compliance requirements.
So staying on the right side of the law is paramount. But what about access to funding? Is that still a major hurdle for startups in Indus Valley?
As we discussed earlier, funding can be a challenge, particularly for later-stage companies. While the venture capital landscape in India is maturing, it's still not as deep as in markets like the U.S.
So a more competitive fundraising environment. But haven't we also seen a rise in alternative funding sources like those micro VCs we discussed earlier?
That's a positive trend. The emergence of micro VCs and other alternative funding sources is helping to fill the gap, particularly in the early stages. But startups still need to have a solid business plan, a strong team, and a compelling pitch to attract investors, no matter the source of funding.
So it's not just about having a great idea. It's about building a solid foundation for growth. But what about competition from larger established companies? Are they a threat to startups in Indus Valley?
Large companies are definitely paying attention to the innovation coming out of the startup ecosystem. Some are acquiring promising startups to bring new technologies and talent in-house. Others are launching their own ventures to compete in emerging markets.
So it's a mixed bag. On the one hand, large companies can be a threat. But on the other hand, they can also be valuable partners, even acquirers, providing startups with access to resources and markets that they might not be able to reach on their own.
Exactly. It's a complex ecosystem, and startups need to be strategic in how they navigate these relationships.
It's about choosing the right battles and finding opportunities for collaboration. Now, the report also highlights the role of government in supporting the startup ecosystem. What are some of the initiatives that the Indian government has launched to foster innovation and entrepreneurship?
The Indian government has been actively promoting entrepreneurship in recent years. Programs like Startup India provide tax breaks and other incentives to encourage new ventures. They've also established incubators and accelerators across the country to provide startups with mentorship resources and networking opportunities.
So a pro-startup stance from the government. But what about the infrastructure? Is India's infrastructure keeping pace with the needs of this rapidly growing startup ecosystem?
That's an area where there's still room for improvement. While India has made significant strides in developing its infrastructure, particularly in digital connectivity, there are still challenges in areas like transportation logistics and access to reliable electricity, especially in rural areas.
So infrastructure remains a key bottleneck that needs to be addressed. But beyond just economics and infrastructure, there's a growing awareness that businesses need to play a role in addressing broader societal issues. Is this something we're seeing reflected in Indus Valley?
Absolutely. There's a growing movement towards purpose-driven entrepreneurship in India. Startups are realizing that they can be a force for positive change, not just disruptors.
So it's not just about profits anymore. It's about using innovation and entrepreneurial spirit to make a difference in the world.
Exactly. We're seeing startups tackling challenges in areas like healthcare education, financial inclusion, and sustainable development. They're using technology to create solutions that benefit society as a whole.
This whole concept of Indus Valley is about more than just startups and venture capital, isn't it? It's a reflection of India's broader ambition to become a global leader in innovation and technology.
You've hit the nail on the head. Indus Valley is a microcosm of India's transformation. It's a story of ingenuity, resilience, and a relentless pursuit of progress.
It's an inspiring story, and I'm eager to see how it unfolds.
Yeah.
But before we wrap up part 2 of our deep dive, I want to circle back to something we touched on earlier: the influence of the Indus Valley on Indian advertising. It's a topic that deserves further exploration.
I agree. It's a fascinating phenomenon. Indian startups have brought a fresh perspective to advertising, challenging traditional norms and creating campaigns that resonate with a younger, more digitally savvy audience.
So they're rewriting the advertising playbook. What are some of the key elements of this new approach?
Well, one of the most striking differences is the embrace of humor and relatability. Indian startups are not afraid to poke fun at themselves. to show their human side. It's a far cry from the polished, often aspirational tone of traditional advertising.
So a more authentic and engaging style.
Exactly. And they've been incredibly creative in their use of social media, crafting viral campaigns that spread like wildfire.
It's about capturing attention in a crowded digital space.
Yeah.
But the report also talked about a specific advertising trope that Indus Valley startups have pioneered.
Yes, the trend of humanizing celebrities. Instead of portraying celebrities as untouchable icons, they cast them in everyday situations, often with a humorous twist.
So bringing celebrities down to earth and making them seem more like one of us. But isn't there a risk of this strategy backfiring? What if people start to see it as inauthentic or manipulative?
You raise a valid point. There's a fine line between being relatable and being inauthentic. If it feels forced or disingenuous, it can backfire.
So it's a balancing act. But how have established brands responded to this shift in the advertising landscape? Are they feeling the pressure to adapt?
Some have been quicker than others, but many are recognizing the need to evolve. We're seeing more and more traditional brands partnering with startups, and those edgy creative agencies that emerged from the Indus Valley scene, they're realizing that to connect with younger consumers, they need to embrace humor, relatability, and a more authentic communication style.
So the old guard is learning from the new kids on the block. It's a fascinating dynamic. But now, let's move on to another key aspect of the Indus Valley Report, the section on funding trends. What were some of the key takeaways from this section?
One of the most striking observations is the huge difference in funding levels between the U.S. and India. The U.S. venture capital market is far more mature and deep-pocketed, with significantly larger investments flowing into startups.
So there's a significant funding gap. But isn't it also true that Indian startups often achieve impressive growth with far less capital than their U.S. counterparts? Maybe it's not just about the amount of funding, but also the efficiency with which it's used.
That's a great point. Indian startups have a reputation for being scrappy and resourceful, making the most of limited resources. They've learned to operate lean and focus on building sustainable businesses from the start.
So a different mindset, perhaps born out of necessity.
Yeah.
But is the funding gap closing at all? Are we seeing more capital flowing into the Indus Valley?
It is closing, albeit slowly. India's venture capital ecosystem is still relatively young, but it's growing rapidly. We're seeing more domestic and international investors attracted by India's vast market potential and its reputation for innovation.
So there's reason for optimism. But India still has a long way to go to catch up with the U.S. in terms of venture capital funding.
That's true. But it's important to remember that the Indian startup ecosystem is evolving in its own unique way. It's forging its own path, driven by the specific needs and characteristics of the Indian market.
And that's what makes it so fascinating to watch. This deep dive into the Indus Valley Report has given us a comprehensive view of the trends shaping India's startup ecosystem.
We've covered a lot of ground, from the macroeconomic context to the specific playbooks startups are using, the challenges they face, and the opportunities that lie ahead.
It's been an incredible journey so far,
Yeah.
but we're not done yet. There's still much more to explore in the Indus Valley. Welcome back to our deep dive into Indus Valley. It's been an incredible journey so far, wouldn't you say?
It really has so much to unpack. This report is truly a gold mine of insights.
You know, I'm still thinking about how Indus Valley has influenced Indian advertising. It's a topic that we just keep coming back to.
Yeah, it's fascinating how these startups are shaking things up.
Absolutely. So remind me again, what's so different about this new approach to advertising?
Well, they're not afraid to be playful. They embrace humor and relatability, which is a breath of fresh air compared to those traditional, often kind of stuffy campaigns.
Right. It's a much more authentic and engaging style.
Exactly. And they're masters of social media. They know how to create viral campaigns that capture people's attention.
It makes sense in today's digital world.
Mm.
And they're really good at using influencers too, right?
Oh, absolutely. Partnering with those popular YouTubers, Instagram stars, even TikTok creators, it's a smart way to reach a younger audience.
It is. It's all about tapping into that trust and credibility that influencers have built. Now, the report also mentioned a specific tactic, like an advertising trope that Indus Valley startups have pioneered.
Ah, yes. The art of humanizing celebrities.
Right. Tell me more about that.
Instead of portraying celebrities as, these untouchable icons, they cast them in those everyday situations, often with a humorous twist.
It's brilliant, really. Makes those brands seem way more approachable.
Yeah.
But I got to ask, how have those established brands responded to all of this?
Well, some are definitely adapting faster than others, but many are starting to realize that they need to evolve. They're partnering with startups and those creative agencies that came out of Indus Valley.
It's fascinating how the old guard, is learning from the new kids on the block. Now, before we wrap up this deep dive, I want to touch on India. That Indian diaspora, a global community with so much potential.
It's a market that's often overlooked, but as the report highlights, India represents a massive opportunity for startups.
So how are companies tapping into this global audience? What are the strategies for connecting with India?
Well, Bloom Ventures came up with this framework, the Diaspora Marketing Framework. It's a 2x2 matrix that categorizes diaspora personas based on income and how closely they identify with India.
Makes sense. You got to tailor your approach, right?
Exactly.
What about specific channels? How are they reaching this audience?
Influencer marketing is a big one. Indian influencers, particularly those based in the US and UK, they have a huge following among the diaspora.
So tapping into those existing communities and those trusted voices, what other channels are proving effective?
Social media advertising is another big one. Platforms like Facebook and Instagram, they allow you to target very specific demographics within the diaspora.
Okay, and it can get pretty granular, I bet.
Yeah, you can target based on location, interests, even language preferences. And then there are those diaspora-focused media outlets, both online and offline, that can be very effective in reaching this audience.
So a mix of traditional and digital strategies, each playing a role. This deep dive into the Indus Valley has been an eye-opening experience. We've explored the trends shaping India's startup ecosystem.
We've uncovered the challenges they face, the innovative strategies they use, and the incredible opportunities that lie ahead.
The Indus Valley Report has painted a vivid picture of this dynamic landscape.
A landscape teeming with innovation and entrepreneurial energy.
It's clear that India's startup scene is a force to be reckoned with. It's a story that's still being written. A story of ambition, resilience, and a relentless pursuit of progress.
And one that we're excited to keep following.
Absolutely. Thank you for joining us on this deep dive. We encourage you to check out the full report and continue your own exploration of Indus Valley. Until next time, keep learning, keep exploring, and keep diving deep.